Tonight, as California lawmakers work to pass a balanced budget, a new tax on corporations and digital software is facing opposition. As always, thank you so much for joining us on To the Point. I'm Alex Bell. Critics say the tax could increase the cost of living for everyday Californians. ABC 10's Jeannie Nguyen is here to explain the push behind the tax.
Well, Alex, as we've reported, the state is currently bringing in a lot of revenue from the successful AI boom and stock market. Governor Gavin Newsom acknowledged that is not steady income, and that's why he's introduced this new tax. But the California Taxpayers Association and major manufacturers warned that this could hurt the state more than benefit it.
It's not good news for affordability for Californians.
The California Taxpayers Association is referring to Governor Gavin Newsom's tax policy proposals. In order to reduce any potential for a budget shortfall for the upcoming years, Governor Newsom is proposing new taxes, including imposing a sales tax on digital pre-written software and limiting the amount of tax credits a corporation can use per year.
It's a $6 billion a year tax increase, and it's on software downloads. It's on business-to-business transactions, which ultimately means consumer prices will increase.
The manufacturing and technology industries would be impacted most if these proposals pass. The California Manufacturers and Technology Association, who represents major corporations in the state, say this would have a negative effect on the state's economy.
We're all using software in our business-to-business transactions. We're using software internally at our companies, and the impact would be felt throughout the economy, which would be adding costs at a time when affordability should be the priority in addressing that issue.
Arguing that if the legislature approves the governor's proposal, the plan could end up backfiring.
They're looking at ways to continue their companies. Some of those strategies include relocating.
While the goal of the proposal is to bring in steady revenue for the state, during the governor's budget revision presentation earlier this month, Newsom acknowledged the changes to the tax policy and credits will help support smaller businesses.
Helping support startups, small businesses, and then try to level the playing field with big corporations by simply capping the tax.
With the increased revenue coming into the state, instead of creating new taxes, the CTA suggests budgeting.
There are some places you could cut back a little. Clearly not every pothole has been filled, well. There's the high-speed rail still out there costing money, the Capital Annex project.
And I reached out to the legislative leaders in the governor's office about concerns over higher consumer costs and companies leaving the state. Democratic Senator John Laird says it's the Senate's understanding that the proposals are intended to protect consumers, support small businesses, and maintain a strong economy, adding that lawmakers will review the impacts to avoid unintended consequences. The Assembly says it's closely reviewing the proposal ahead of the June 15th budget deadline. Alex.
All right, Jeannie, thank you so much.